A Deutsche Bank Commerce Bank merger. What do you think?
Well, if you create a stronger institution, it's all going to benefit the whole industry and the whole European banking industry. However, when you do this type of transactions, I think it has to be for a reason. It could be because you have identified some very specific, economies of scales. You want to play a market share gain, or you want to create a national champion. Having said that, the complexity of merging banks today, we should be candid. Let's not undermine it. Merging and making work together systems, infrastructure, data, cultures is something that is quite challenging. For the platform here in the US, I have to say, have benefited from organic growth. We built this platform between retail and wholesale over the many years. And having said that, we've remained very focused on client-centric, because eventually what we do well and what we do first as bank is serving clients. You don't want to be too distracted from this priority goal.
At the same time, as you suggest, the environment right now for banking in the United States is quite different from Europe. I mean, we heard from the Commerzbank head just overnight about why he thought this might make sense. He said, we will take further steps in, if we could roll it, please. Make further steps in order to increase our growth and our profitability. At the end, the question will be whether a potential tie-up makes strategic and economic sense, and how such a model could
look like.
Okay. But my question is this. We have an ECB that's in a very different situation to the Fed, where you have negative rates over there. How much is that really weighing on banks? And for that matter, BNP Paribas has done better, actually, than many of the European banks. Why?
Well, two things here. Yes, different environment. However, the ECB has kind of mirrored what the Fed has been doing here, in terms of providing QE at one point in time, in terms of unwinding the balance sheet, probably at a slower pace there. But the ECB has really used QE and provided stimulus in many different ways. What's different here in this situation is the economic status. There is less growth in Europe. And negative interest rates here, let's be candid as well, have been very beneficial to the Eurozone in terms of GDP growth. Your point, David, is to say, are negative interest rate, sustainable over the medium term? And probably not. Having said that, if you look at the two differences there, is it's quite important to continue to support and stimulate the economy there, and this is exactly the status we're facing for the time being.
So the ECB finally looking at the impact of negative rates in the banking system in Europe, talking about potentially tiering deposit rates, so certain banks won't have the negative deposit rate, or you still have the long-term loans. Which one's going to work? What do you want to see the ECB do?
Well, the ECB actually has different tools in their toolbox. Tiering is going to be, probably one way to deal with it, to try to, not disadvantage too much the banks that, have significant deposits and have large retail activities. But they are, resurrecting for the third time, TLTRO, which is another way to inject liquidity directly in the banking system. And obviously, they've probably will unwind the balance sheet, unlike what the Fed has been doing here, at a slower pace to make sure the stimulus continues to be there.
Jean-Yves, you're responsible for the United States in particular, and you spent a lot of your career actually here in the United States. As you look at European clients, whether French or otherwise, coming to the United States, how do they regard the United States as a way of as a place of doing business and a place to invest?
This is one of the most vibrant economies in the world, and it's been very attractive to European clients, European investors. This is what we at BNP Paribas have managed to actually support quite well. Let's take an example. A few years ago, a very large cable and media company is acquiring two very large companies in the United States in the cable industry. They needed to raise around $20 billion of funding. A large US bank and BNP Paribas managed to raise this capital within a few weeks, just before, by the way, at the time, the high yield market was pretty much shut down. Then that's what we do in terms of managing the cross-border situation. In my position, what is fascinating is having retail on the West Coast and wholesale here. This platform in the US is quite, important. We have like $6 billion of revenues. We have 14,000 people in the United States, and this is, for us, the largest balance sheet allocation after France. And sitting like across Main Street, retail in California, one of the most vibrant states in this country, larger than France, by the way. Wall Street in New York with CIB, and international banking across the Atlantic. It's quite an interesting position to benefit from these various economies.
This is a time where we're seeing a fair amount of retrenchment by a lot of European banks. I mean, Deutsche Bank, the most notorious, but not just Deutsche Bank. How do you compete as BNP Paribas coming into the United States with the big U.S. banks, with the JP Morgans of this world, with the Bank of Americas? How do you stack up? What's your comparative advantage?
Well, it's an excellent point. And, since their respective crises, by the way, both U.S. bank and European banks have become stronger, better managed, better capitalized, and this is the case here, and it's an extremely competitive environment. Then what explained our success and what explained the fact that we've managed to grow has been that we've managed to be more complementary to the large US banks. For instance, when we support large US companies domestically in the product suite we have here, which is very targeted, not as broad as what a large US bank has, but where our competitive advantage becomes slightly different is when it's time to support these companies outside of the US, for instance, in their capital raising in Europe, where we lead in the Eurobond market. Conversely, we've been very proactive at supporting European clients and providing access here, given our strong structuring, lending, and distribution capabilities.
To just sort of kiss off also sort of the overall risk environment for banks, maybe not just in terms of lending, are you taking on more risk as a bank? Are you retrenching a little bit? I mean, it feels like European banks just like retrenched to their home base. Are you willing? How much risk are you willing to take?
Well, back to what we were discussing earlier, having developed an organic business model here, again, balance between retail and wholesale. Retail provides, the deposit, ability to gather deposits, provides a good capitalization, provides the stickiness of revenues, and CIB is a good complement because it's obviously a different kind of risk-taking, but it provides higher margins and good return. Then what we've managed to do here, because of this balance model, is actually to continue to we've been very stable, and we've continued to invest in the segments we believe we have some advantages, or in the vertical we have some added value as well, like the ones which are more global, such as media, telecom, technology, industrial, that we can really develop and support clients around Europe, Asia, and the US. Then if you look at the stability we have here, we have 14,000 people, and we've remained very stable, actually even growing over the last few years.
It's Jobs Day in the United States, as you know. Well, you just mentioned 14,000 people a couple of times. Is that number going up or is it going down? People are very concerned about that because in the United States there's been retrenchment in employment in financial services, but some banks are coming back.
I think it's all about adapting here. You very rightly mentioned earlier, digital, electronification, automation.
I hear that, and I hear job cuts in the back office.
Well, actually, if you look at the recent statistics, some banks have been identified actually over time over the last few years. Obviously, initially, impact of electronification has probably eliminated some jobs, but some banks have been able to actually, on the other hand, recruit more actively because it requires new skill sets.
Are you doing that?
We were named as one of the most active banks to have actually closed the gap, and this is why we've kept and actually slightly increased our staff in the United States. It's all about evolution and adaptation here. For sure, electronification, automation, AI, machine intelligence is putting some jobs at stake, but there is so much more that we need for, particularly in computer science, in modelization, that it's actually created a very positive dynamic in terms of jobs. There is something else which is very important that I want to mention. We have a lot of skilled people in the banking industry at BNP Paribas, and education and training and making sure some of our skilled people can basically evolve into these new activities within is very important as well.
What about investment banking globally? There's a retrenching there in terms of employment. What does that mean for the U.S. business?
Well, because of the diversification we have, geographically, Europe, U.S., and Asia, actually we've a little bit more, I would say, protected from pure trends in one or another product. You know, this bank is around retail, is around wholesale, is around asset management. Then that's a way to actually mitigate, you know, when some sectors or some activities might be more challenged.